today is the day when I can say I'm spoiled for choices. Too many things happening on the market. I can recall in recent times such a eventful week. Right? So I do want to talk about that. A lot of stuff on of course. I think on the stock side, it's been a great week. It's been a good week. That from inflation, after the inflation report data came in, everything seems to be going good. But on the other side, as you might have seen on the meetup, the heading is a tale of two markets, crypto and stock. It's been a meltdown on the crypto side. And if you have watched CNBC, I think they also spent a lot of air time on talking about the meltdown. And now the questions are, a lot of questions around what's the other collateral damage that could happen. So yeah, I wasn't really sure, what to talk, what not to talk. There are so many things. And top of it, now we got earnings, right? This is an earnings season. So yeah, let's see what all we can cover in today's session. But I do want to spend time on what's happening on the crypto side of the house. I don't see it to be any different than what happens in the any company. It's a Lehman Brothers moment right now on crypto. What happened in 2008? Greed, internal dealings that we are not aware of, stuff being done by offshore companies. Offshore, in this case, it's an offshore exchange. So-called the next Warren Buffett losing $40 billion are you losing $32 billion in 48 hours, right? Such an interesting story. I'm hoping some part of a time someone will write a book or a Hollywood movie on this, on the whole story around this crypto exchange. So yeah, and unfortunately, I think there are a lot of people who have lost tons of money in that. So yeah, but that's what happened. Offshore exchanges, you never know, right? And so, but there are lessons to be learned, and it's not just individual investors. We'll go through the list. Many of the seasoned investors have lost money. VCs have lost money, right? So yeah, do you want to talk about it? That story continues to develop. I spent a bunch of time yesterday evening, and this whole stuff, it continues to unfold like every hour. Yeah, Bob says in pension funds also. Yes, Canadian pension fund lost million or around $80 million. I think I have the list. Sam says, thanks for warning me. Are you welcomed? Yeah, I mean, anytime you want to do work on an unregulated offshore exchange is like someone asking you for your money on website and saying, hey, you give me your money, I'll double it. That's the situation. Okay, so that's what happened with this. And it'll be interesting to get through all the crap that has happened on an FTX. Hopefully, people will become wiser and dig deeper to understand what's it's a, as I look at it, it's nothing different than what happened in any company. It's like a pink slip traded companies trading on unregulated exchanges, no oversight, and but people want to put in money. So yeah, we'll talk about that. So that will be tale of two markets. What happened on crypto? What's been happening on the stock market? One side is being hammered down, the other side is going up, which is great. If you have both, your portfolio is balanced. So, all right, let's jump into session today. Like I said, there are too many choices that we can talk about today. One is around capital markets. We saw inflation coming down, markets going through the roof. The other one is crypto drama, which is the most shocking till date. Crypto market is not, it's not new to hacks or these nefarious activities. But what happened this week is the biggest of all. May not in terms of the biggest fraud, because I think still Bernie Madoff fraud, it was higher than this, but how everyone got fooled by FTX. And the third one is some billionaires still behaving bad, right? I don't know what's happening on Twitter. I thought I'm done with discussing Elon Musk, but no, that guy knows how to stay in news. So latest I heard on Friday was his warning that Twitter could be heading for bankruptcy. Right? I don't know what, the things that Elon keep doing, say the news, and their whole business idea around giving blue check mark to anyone who's willing to pay $8 just boomerang, and then they have to quickly roll back that decision. It didn't make sense to begin with without any verification if you're giving the blue check mark. And we know that Elon is desperate to raise money because they overspent by buying Twitter at $44 billion, and now he has to find, and the advertisers started to leave the platform, so they have to raise money from somewhere. And now not only advertisers, right, even the exec teams are leaving. So maybe we'll go through this billionaires saga first, then we'll jump onto the market, then we'll get on to what's happening on the crypto meltdown, and finally to earnings. That's a sequence, unless you want to change it. So a quick timeline of what's been happening. So Elon takes control on October 27th because 28th was the deadline, and he fires the board, and also no CEO, no board member. So there is no one to question whatever Elon wants to do. So first sign of corporate misgovernance. There is no board to question anything. But then he created his own small advisory team, which has its friends and family people, right? October 28th, brands kind of stop advertising or pause advertising. Then on October 31st, when Elon, puts an idea of $20 to get your blue check mark, the big tweeters start protesting. But anyway, Elon goes ahead with it, saying if not 20, let's do it. How about $8, right? But we gotta do it. You gotta pay if you want that blue check mark. But the worst thing is there is no validation of who can get the check mark, and the whole idea was that it would discourage bots, which I think it would, because if there is no cost to creating an account, if there is no cost to spam someone, then you will see those automated bots either creating accounts or sending millions of emails. But if there is a cost to do it, which is what I think Elon was focused on, let's charge them $8, and that will discourage bots. But what he didn't realize it, if you're charging $8, how are you going to validate the person is what he claims to be? Earlier, blue check mark was some sign of validation, but now anyone who can afford $8 could become whatever they want to in Twitter world. But anyway, he pressed ahead with it. teamwork gave this, blue check marks. His idea was to charge the users. And then on November 3rd, massive layoff. I think half of the staff, they let go. And then he realized that, oh, some of the folks they let go were to work on some of the, to keep Twitter alive, and they call them back. I don't know what the drama is happening. Meanwhile, advertisers continue to leave. We see a list of advertisers who have stopped advertising on Twitter. And then November 8th must sell more Tesla shares. He told earlier that he won't be selling it, but nope. He had to sell more Tesla shares, and this came out from a SEC filing. And then November 9th, a lot of advertisers had questions around the fate of Twitter. So Musk started to answer the advertising questions in our Twitter space. And this was on Wednesday. I was driving to office. So my commute is almost 30-35 minutes. I thought maybe let me listen something. I jumped onto this space as well. Yeah. And I mean, I didn't. So there were a lot. Yeah. When I joined it, there were almost 85,000 people already listening in. And looks like eventually there were more than 114K listeners tuned into that. There were questions asked around, what else Twitter gonna do. Twitter also has registered for to be a money transmitter. They have sought for a money transmitter license because it wants Twitter to become a payment services. And once they announced that, we also saw Dogecoin. It was up 50%, I think, last week. Of course, later on it came down. But this whole blue check mark, that strategy, boomeranged, because we saw some fake accounts or parody accounts taking over blue check mark by paying $8 and then tweeting or and then basically tweeting the messages which tarnished that brand images. So let's say Eli Lilly, someone took Eli Lilly, which is a pharma company, and tweeted that insulin is now free, and that caused Eli Lilly stock to drop. Similarly, someone posing a Nintendo posted an image of Super Mario holding his middle finger. So there were, because of this, and those accounts had a blue check mark, which is what people tend to believe, that those accounts are genuine, because that's how it used to be before Elon decided to give blue check marks for $8. So be careful. Blue check mark is no longer a sign of a trusted account. So don't believe if someone is tweeting having a blue check mark. It's not a verified account. It used to be, but no longer anymore. So it did cause a few companies to lose a few billions of dollars in their market cap because of this. And I think that's why Musk got onto Twitter space to address the concerns. Anyway, I didn't find, I was there only for 35 minutes. So I don't know eventually what happened. Then he comes and warns of bankruptcy and saying you got to work 80 hours a week, otherwise company will go bankrupt. And more key executives start to quit. And now we don't know. If you don't have a people, how are you going to run the company? So the fate is yet to be seen. But Twitter is a good platform. Just that we have to figure out how to monetize it. I don't know. Is these changes that it's trying to bring in is too much too soon, without full thoughts going into it? You could do that if it's a startup. I mean, that's how the startups work. That's how they move. Move fast, break things. I don't know at this point of time Twitter qualifies for that move fast, break things, because it is now causing real harm for big companies, for advertisers. So the drama still continues. And eventually then they said, okay, along with the blue tag, you will also have an official tag, but that will cause a little more confusion on what does a blue tag without official tag means. So lot of drama on Twitter. Glad that this company is out of stock market. So hopefully the shareholders is only Elon Musk. Others won't be impacted by this, but we'll see what happens. The bigger concern is his involvement and his actions on the Twitter is also causing concerns to Tesla shareholders, right? Rather than spending time on focusing on Tesla and maybe SpaceX, now Elon is mired into this controversial buying of this social media platform, now trying to, set it right. He's a smart person. He's the wealthiest person. He knows how to do the things. But at some point of a time, it's a big org, may or may not will run it in a dictatorial way, which he is used to. But we'll see what happens on that one. So that's on the Twitter drama. There is no dearth of drama in the markets. Macro side, I would say it was a great week. I see all tech stocks were up. Yeah, because we got a hint that the inflation is cooling. And the numbers came out to be a little better than what the market or economists were pricing in. The core CPI, it fell back to 6.3%, right? From 6.6%, which was good. Used cars and trucks fell by 2.4%. The thing that continued to keep rising is your cost of shelter, right? That continued to rise. It's the biggest increase over 32 years, but yeah, it was compensated. The overall inflation was compensated by used cars and trucks, etc., as well as the medical services. So overall, the numbers came down and the market started to surge. Yield fell sharply. And I think at some point of time, the 10-year note was down almost 300 basis points, more than 300 basis points, which has happened only twice in recent time. So when the bonds are down, stocks or a growth stocks goes up. When the yield on the bonds go down, the whole sentiment of the market is taking more risk, and that's where we saw a lot of growth companies. The tech companies did great. So even these are some of the companies I hold in my portfolio, all growth companies. Magnite was up like 100% in 2 sessions. We'll go through the result of this, but I didn't find anything in the result that would cause it to go up like 100% in 2 sessions, right? It's just that people are now thinking advertisers would be back in the market. Fed might pivot, and that's what they're focusing on. That Jerome pivot could come sooner than what's expected, but I'm not holding my breath on it. I'm not putting my money assuming that the Jerome Powell will pivot. I still think it's too big a move too soon in the market this week. So I'm not going to chase it. I'll be cautious. I did lose a lot of deltas this week because the markets went up. So we'll still pile a little more negative delta because overall still bullish, but I want to reduce little bullishness by adding more negative deltas to portfolio. Dox up 32%, right? After earnings. Unity is up 50% in 2 days. The earnings were not great, so it got punished after earnings. But then on Thursday and Friday, because it's a risk on, it's up 50%. DocuSign is up 35% in 2 sessions. Right? ARKK, which is a symbolic of all risk on behavior, innovative tech growth companies, is up 24% in 2 days. But days like these, like Thursdays and Fridays, again remind us that it's impossible to time the market. So time in the market is more important than any trying to time the market. So if and there were some other stats that I was reading through in terms of majority of the the gains in the stock market over the last 20 years have come in those 10 days. If you miss those 10 days, your performance in the stock market would be 40% lower than what generally is, right? So yeah, this is why I want to continue to stay in the market, because there is no way anyone could have predicted that markets will behave the way they have behaved on Wednesday and Thursday. And now if I was sitting out, it's very difficult to get in if the markets have already moved up, let's say 10% in a week, because the whole point is, I think it's going to come down, but we don't know whether it will not. It's only time will tell. So I'm still staying in the market, still selling premium to reduce the basis, try to adjust the deltas as and when market moves, but yeah, not selling anything, not cashing out. You may want to reduce in terms of what the additional cash you may want to bring in depending on your situation. But yeah, I mean, time and again we have seen it's only thing that works is stay in the market, don't go too big, and wait it out. That's my plan. So indices perspective, everything looked great, despite Nasdaq being up. I guess it was up maybe 7-8% for the week. It's still down almost 28% year to date. Right? So it's a lot to catch up, but it was a good week, I would say. Now, are we going to get Santa rally? I don't know. If you go back, historically, Q4 is a bullish one, but history may not always repeat itself. What do you guys think? Are we going to get a Santa rally? Is it time to, those who've been sitting out, is it time for them to get back in the market? What's your thought? I mean, till now, we have defied some of the earlier forecast from talking heads around the earnings going to be bad. Earnings surprisingly have been better than what was anticipated. So earnings have been okay. And now they're talking about maybe Q1 2023 earnings will be bad, but who knows? All set for, I know you get set for Santa rally. Such as a brief Santa rally, but real fun once figure stops increasing rates around March. There's a clarity that rate will go down in future. Rates will go down in future, but I think so far, Fed is only thing that we heard from Fed is that the terminal rate will be near or higher than 5%, right? So will it stop increasing in March? Right now, what's the Fed rate? Is what, 3.75 with the recent hike? What's the current rate? Okay, it's 3.7. So if you had to go to the 5 level, okay, let me just pull this up. Okay, 3.75 to 4%. Yeah, so it's still, yeah, if March reaches 5%, after that start to pivot, market will, if it starts to, if Fed gives a hint, not just even starts to pivot, I think if they give a hint saying that looks like the inflation is under control, and we will look at or give a hint to the market that they may slow down, to 25 basis points instead of 75, a market will rally on that itself. Markets won't wait until the slowdown happens or until the pivot happens. I think market will just move based on the direction or the guidance that Fed would provide. Okay. Sector-wise, no surprises here. IT sector, communications were behaved the best. These are the risk sectors, growth sectors. So this week was all about growth. Overall, S&P was up 6%, right? Which is great. This was, I would say, a big relief rally after a few months. Maybe last one we had was in June or somewhere. Okay. But then we couldn't carry through that rally, and then the market tanked back. So yeah, from almost 375 to touching 400. Reminds me of a rally like this. What we had it in July. From July all the way till August. We had some deep mid of August was a decent rally. Let's see how much we get during this time. All right, greed and fear index still moving, staying in the greed section. And that's all I think I had on macro side. Next, we want to talk about the biggest drama that's unfolding in the crypto sphere. Clement, is it okay to go through that, or should we first go through earnings? Because this drama continues to unfold. It's like watching a movie in front of, this is happening live. And the best thing was on the Twitter Spaces, you see a breaking news, and this was yesterday night, while doing the dishes, I jumped onto a Twitter Space, and it was a perfect example of citizen journalism. Folks are pulling in information, looking at the blockchain, and then we saw Reuters and Bloomberg. Their representatives were also in the Twitter Space, and then they are posting information through their regular channels. So that was a great example of citizen journalism, crowdsourced journalism. Okay. All right, so we got I got 2:1. Let's we can go through earnings, and then we can come back to on the crypto side, unless someone wants to weigh in and tilt the favor on crypto. All right, so earnings it is. So we'll get through the earnings. Yeah, even Mr. Wonderful got, I would say, hoodwinked by crypto. Okay, so I think before earnings, there was a question on ASML. Yeah, so ASML continues to dazzle. We saw a big move up in ASML, and ASML stock was like what, 424 a few days ago, and it's up like 25%. And this is like $250 billion company. It's not a small cap. It's not a company whose shares could be manipulated. But we did see ASML jumped higher because they had their investor day, and in an investor day, they mentioned that they don't see much headwinds from restrictions on China, because the kind of chips that they have been selling to China were anyway not a part of US restrictions. Number two, they continue to see great demand because countries are trying to build their chip plants. And third is they also increase their buyback. So the stock had done wonderfully this week, jumping up almost 25%. So this is great. Yeah, 52-week high was 881. That is true. And this also corresponds to when AMDs were close to 150s and all those. Nvidia was up wherever it was, but now all those stocks had cooled down. But I still hold ASML. I mean, it's a company that has got a monopoly. So yeah, good to be in, because no one can, at least in the near future, at least for the next decade, there is no other company which can do what they are doing. So when you have such a strong grip on a particular segment of the market which is growing, I think I will still stay here. The only risk is the geopolitical risk, but so far that doesn't seem to impact them. Right. All right, let's jump into earnings. Then we can come back to the meltdown and some of the other stuff that I saw in the markets. So first, earning look at Magnite. Those who are not aware, and this is what I want to follow. Maybe I'll give a brief intro of the company, if you haven't heard that name or if you don't know about it, and then we'll jump onto the earnings. So Magnite is the largest independent sales advertising platform. You might have heard of Trade Desk. We'll also talk about Trade Desk, which is an advertising platform, but that's more from ad buyers. Magnite does the same thing, but on those who are publisher side, those who basically ad sellers, right? So this, like many of the advertising tech companies or companies that generate the revenue for advertising, Magnite, Trade Desk had a huge run up in 2020, 2021, and then the bottom fell out from them, and the stock was down. Like at the start of the year, it was around 23, and then we've seen what happened to the whole, companies that depend on advertising revenue. Along with that, same thing with Magnite. It was some part of a time it was close to $5.50. But in last 2 days, we saw a huge jump of like more than close to 100%. So comparison person, Magnite is to ad sellers, what Trade Desk is to ad buyers. They reported results, I think. So one thing which I want to focus on is their connected TV, because that's where the next growth is going to come from for Magnite. And it's good to see that's up 29% year over year. Overall revenue is up 11%. But the CTV, which is going to be the next growth engine, in which they have also made some acquisitions, this is better. It's growing at a higher pace. Positive operating cash flow of 28.6 million. Nothing much on the balance sheet, etc., that needs to be highlighted. Like I said, from a channel perspective, if you look at how the growth is coming from. So of course, when you're looking at advertising, it operates in multiple platforms: desktop, mobile phone, as well as a connected TV. And the connected TV is becoming bigger and bigger portion of the revenue, and which means basically this all points out to your Disney Plus, Netflixes, Hulu's, Roku's, more and more users moving towards streaming content, and that's where the Magnite will benefit with the growth in the streaming content, because that's what now they focused on, bringing more from a connected TV. So from that perspective, I liked it, but the results were not that great in terms of, to warrant looks like 100% jump in the stock. So it's a head scratcher for me in terms of what could cause the stock to double up in 2 days. I'm not complaining, but my perspective might be just unsustainable. I don't know if it is a Wall Street bets, but the stock is also not too short. The short interest is just 12%. So we'll see. They did beat expectation, but not by huge margin. So if you look at the short float, 7.97% is what it short. So even with this jump, they are still down 50% from a 52-week high. So pretty small company, but I do want to own this in my portfolio just for the growth in the streaming content and the growth in the streaming advertising, right? Now we see even Netflix is resorting to advertising. Disney is gonna include advertising in their platform. So I do want to hold, basically I want to hold both the buy side as well as the sell side. So this is the buy side helping this is to help the sell side of the advertising platform. So that's on Magnite. Happy shareholder, but I think at this point of a time, I believe this is too much. So I sold some covered calls to get a premium. I won't complain if those covered calls are called away from me. It's at $14 and $15. If it gets called away, that's great. But I think this jump is too much too soon. Any questions on Magnite? Alrighty, let's move on. Any shareholders of Magnite? Okay. Next is NanoX. This is a moonshot company. I would say it's a pre-revenue, still trying to approve the technology, right? It's in the field of revolutionizing the X-ray machines. Those who are not aware of NanoX, this is how the current X-ray machines and their cooling systems look like. What NanoX want to do, what they want to do is to simplify, and they've been working on this technology for now almost 11 years. It came out of a Sony group when they were working on 3D television. They just repurposing it for medical, repurposing it in the medical segment to create an X-ray, which is cheaper to produce, much easier to move, not as bulky as these one. So, and they have a strategic partnership with Foxconn, Fuji, SK Telecom. Like I said, this is still a pre-revenue company, still working with hospitals and the FDA for approvals. So what I want to see here is, did they make any progress in their FDA approval stuff or not? Revenue, we can just ignore it, like 2.4 million revenue. Nothing to talk about. More important is, did they get where are they on their stage of approval for FDA on this multi-source NanoX ARC systems, right? Right now it could be these are the stocks which we got to be very, very, very careful in terms of keeping our position size. It will go down to zero if FDA doesn't approve it, right? So you got to be careful if you have or want to get any exposure in stocks like this. But yeah, a small part in a portfolio won't hurt, because if it indeed is approved, I'm sure there'll be many bigger players who will be ready to buy this company because they're gonna change the whole. They're gonna change how the X-rays have been taken for decades, right? But again, very risky, depending on, it's just like a biotech company. So, but yeah, it did see a little bit of a jump after earnings, because they moved one step closer towards submitting the documentation to FDA. And I think the last 2 days of Thursdays and Fridays, where everything which is risky, investors had appetite, it also saw some movement from that. Nothing much from a business perspective. Right. All right, I see a question. Would you be back if called away? Yeah, I mean, I think that question is for the Magnite. Yes, if it is, first of all, I'm not sure if it will get to $15 till December, because Magnite moved up too soon. But if it would, then yeah, I'll start to sell a short put again. Reviewed this last year. Yes, we did review the NanoX as a company, and I'm still holding the same view on this company. It's a pre-revenue. It's kind of it's a lottery ticket. So don't spend too much money on a lottery ticket. If the lottery works out, then small money will itself is great. If it doesn't work out, then hey, it was a lottery ticket, right? So don't want to spend my retirement money on the lottery ticket. So treat it as a lottery ticket and size your position accordingly. All right, third one I want to talk about is Trade Desk. So Trade Desk has been a great stock for investors over past many years. Of course, this year story is not that great because of dependency on advertising revenue. But if we look at, I think over the last 3 years, it was trading near $20 all the way to 114. Now came back down to 45 because of the headwinds in the advertising sector. But overall, I think this quarter, again, they grew with 31% growth overall in revenue. So let's look at their overall revenue growth was 31%, which is, I would say, still good given the headwinds that we are seeing on the advertising side. They are able to grow their revenue by 31%, even in this current scenario, which means they do have some staying power in this business. What we also liked was customer retention remained over 95%, right? As it has been for 8 consecutive years. This is the biggest player when it comes to the buyer side, helping companies, those who want to buy ads on, digital ads or ads on a digital media. So, for example, if I'm a car company and I need to buy an ad to show it on, let's say, wallstreetjournal.com. So wallstreetjournal.com is a publisher and or a seller of the ad. And if I am, let's say, Tesla, I'm the buyer of the ad. Now, the Trade Desk is what I'll interact with to find the best place and basically participate in our auctions to get an ad space so that the Tesla car ad shows up on Wall Street Journal, right? So as more and more advertising move towards online digital space, there is a space for these companies, advertising tech companies, who are helping the buyers and sellers to perform in an optimal fashion, because all these are done programmatically. There's no human involved in this, or that's why I'm in of course both in the Trade Desk as well as on Magnite stock, because I think the advertising will continue to move towards more and more towards the online front, right? So last time when I talked about Trade Desk, I mentioned I do want to talk what's the adoption of their this standard which Trade Desk is promoting, because one of a bigger concern in advertising in agency is these privacy stuff that Apple has brought in. And of course, Facebook lost 25%. It caused the first negative growth in revenue because of the Apple stuff. And of course, Pinterest, Snap, they all got impacted by Apple. So what Trade Desk was doing, of course, Trade Desk also got impacted, but they've been preparing for quite some time to create a standard in which the user's privacy will be protected. However, advertisers could still get some data to sell advertising, and that's the Unified ID 2.0. And looks like it is still it's gaining some traction on UID 2.0. So as long as if this gets adopted, so Trade Desk will be in the forefront on setting up the standards for online ads without the use of cookies, etc. So today, the way your advertisers track you is through the cookies, right? And Google had announced, and then they postponed. They had earlier announced that they will stop supporting third-party cookies, but then postponed the decision to, I think, 2023. But whenever it comes, either the concerns were if you don't have a cookies, or those are not familiar, is a small piece of information that if you visit any website, so that website will, your computer will, your browser will download that small piece of information from that website and store it on your computer. And that's how when you go to, another website, they look at your cookies and understand what, where you have been, what you were interested in, things like that. So if the Google Chrome, which is the most widely used browser in the world, if they stopped supporting cookies, the concern from advertisers is, how do we know about you? So that's where the Trade Desk started promoting a unified ID 2.0 standard, and it is gaining some traction. So we saw Media Math that works over 3,500 advertisers that will start supporting UID 2. P&G with Procter & Gamble, largest advertisers one of the largest one in the world, is also supporting adoption of UID 2. What else? Fubo TV will be the first CTV platform to adopt. They were the first one to adopt UID 2. They reported ad revenues increasing 113% faster on their platform. So I think so far so good. I don't see anything concerning in here, unless you guys have heard anything around Trade Desk. So I'll still continue to be shareholder of Trade Desk. All right, let's move on to the next one. Walt Disney. I don't have to talk about what this company is. Hopefully everyone knows about Disney. Their revenue grew 9% quarter over quarter and 23% year over year. EPS was declined from 37 cents to 30 cents, which is not that great. But I do want to look at the segmented revenue of Disney, because Disney has got a parks and then it's got its entertainment business. So if we're looking at a segment revenue, so surprisingly, the Disney media and entertainment distribution, actually the revenue declined in this quarter by 3%. But what kept the overall quarter still better was the parks. No surprises here. Go to Disney parks, the tickets prices are through the roof. Parks are crowded. People want to go out. No longer fear for COVID. So Disney parks have kept them, in green. But the fact that the future growth engine and a lot of evaluation of Disney was based on the growth in their streaming media. And if that revenue has declined, that doesn't bode really well for Disney. So I think that's why I think after the earnings were announced, Disney actually fell down 15%. Sorry, 13%. Right? Market didn't like that the streaming business, which includes Disney Plus, ESPN, Hulu, revenue actually declined from them. Right? So if it was not for the parks, the situation would have been very, way worse. And also, from an income perspective, it lost a lot of money, the Disney media. So if we look at last year, the media entertainment, they made $947 million. This quarter, the operating income is down 90%. Had it not been for parks, the situation would have been worse. So now, if your valuation that you were getting was based on the growth and profitability of your streaming system, because hey, Disney is going to be next Netflix, right? And that, at least for this quarter, really didn't work out. There were some kinks that were seen, and that's why the stock got punished. Right? What other thing that caught my eye when I was looking a little deeper into this, your, paid subscribers increase, which is good. Overall, I think on a Disney Plus, the subscribers increased by 40%. But your revenue is actually decreased in the most, I would say, profitable segment, which is the domestic segment, US and Canada. The revenue per customer actually decreased, even though the number of customers have increased, so the revenue is decreasing. So the questions that are being raised is, can Disney convert it into a profitable growing business or not? Okay. Probably it is too early to come to any conclusion. And if you look at the Netflix history, they had to spend huge amount of money on content. So it shouldn't be a big surprise that they will continue to spend a lot of money, right? So we would expect pressure on operating margin. But what did surprise was, does Disney not have a power to charge customer a higher price? Clearly looks like the staying power or the pricing power that we thought Disney had because of the great content library that they own, at least this quarter, didn't seem to be true. So that's the reason market punished Disney after earnings. But then there comes our Fed pivot, and then everything goes up. So I hold Disney, so I take this advantage, sell another covered call on Disney. So that's a concern. We'll have to see. I've been on and off on Disney in last 1 year. I was bullish on Disney in 2020, 2021, earlier 2022. I kind of pivoted because of how the new CEO, not new now, it's like 3-year-old, Bob Chapek, and his management style, and how he did the restructuring, and how he handled some of social or more visible issues, with a tussle with the Florida government and some protests happening through Disney employees. So I was like, not sure if I want to be, long-term holder on this. I have to see if Bob Chapek is the right person or not. So I became aggressive in selling covered calls to reduce cost basis. And if it gets called away, that's fine too. And then in a previous quarter, Disney surprised everyone by posting some great earnings result, right? So then, okay, as long as the business continues to perform, if a CEO or Bob Chapek may not be, if he's not able, if he continues to deliver on the numbers, then I should still be okay as an investor. So gone back and forth on this one. I still haven't completely made up my mind on, should I go bullish or should I go bearish on this one yet? I think we'll have to give a few more quarters to see, because the situation changes every quarter to quarter. So, but yeah, I'll still, if I become bullish on it, we'll sell a put spread. I already have a covered call in place, and continue to reduce cost basis, and that's all we can do as an investor. I can't control what Bob Chapek might do, might not do, or what analysts may or may not expect. All I can control is how I can reduce my own cost basis of owning Disney, right? So if I look at board, the shares are close to 105 right now. Cost basis is 78. So I don't mind selling covered calls on 105, and get some premium and reduce the cost basis further. So that's all on Disney. Like I said, got a great content library. Their park business will continue to go, but the lot of majority of the valuation that Disney saw in 2021, 2020 came from their streaming side. So they have to deliver on the streaming side. They have to demonstrate to the market that they can grow the streaming business and make it as a profitable business, right? If you continue to bleed a lot of money on this one, I don't think market right now has an appetite for it. And that's why we saw stock getting punished. But I'll hold it. I'll hold in my portfolio. Could further reduce the cost basis. So anyone else have any thoughts on Disney? Okay, I see some interesting message on Elizabeth Holmes. Looks like government recommends the court sentence the defendant to 180 months in custody. That makes around 15 years, and order her to pay 803 million in restitution. Yeah, should be. That was a fraud. FTX to be a fraud. So I think white collar crime need to be dealt with iron fist. It has to be dealt strongly. All right, no question on Disney. Shall we move on to the next one, which is Palantir? Any holders of Palantir? Okay, looks like no. All right. So Palantir is a company which is a little enigmatic, sometimes a little difficult to understand what the heck they do, sometimes a little secretive, but they are a very niche company focused on delivering AI-based, it's artificial intelligence, data analysis. Call it as a data analysis company. They have a tools to analyze vast amount of data using AI and the tools that they build. Largely focused on government business, but have pivoted towards the commercial segment over the last couple of years. So they got two products. One is Foundry, another is Gotham. Most of the people know Palantir, and depending on which side of depending your own inclination, some people like Palantir, other people hate Palantir because they work with CIA, they work with ICE, they work with Pentagon. So there are everywhere when it comes to the US defense and government agencies, right? But their software it works for them, right? But the problem with them is if they only the only source of revenue, if it's from a government sector, then you can't get valued as really a software company like other commercial software company gets valued at. So they realized it a few years ago and started to pivot, and not completely pivot, but also expand their commercial segment. So last week, I mentioned that while looking at Palantir, I do want to look at how they are doing in their commercial segment, because that's my investment thesis on this, is their growth on the commercial side. But like I said, they work with with government at all levels, and companies like Palantir is only one of 3 companies with the highest level of certification from DoD. So from a results perspective, overall revenue grew 22%. That's okay. I'm more interested in commercial. So commercial grew 53% year over year, which is good. This is what I want to see. Overall customer count also grew 66%, but the commercials one grew 124% year over year. So if kind of an investor who, which I'm a little more on the growth side of investor, steady state, depending on just the government contracts, is a steady state business, will continue to bring in revenue, but not much growth. And if you're dealing with the government, companies generally do not have much negotiating power, right? Because the contract sizes are so big, the government will demand concessions. Number 2 is depending on the government budgets, and which there's a lot of societal pressure on reducing the budgets for on the government. So these companies also become dependent on which party is in office and how the government budget works. And if then these companies start to get compared with other defense contractors, like Booz Allen Hamilton's, Sunstrands, things of the world. And then those valuations are not as great as the software companies. So if Palantir has to achieve, and Palantir wants it to be seen in the same level as how other software companies are, and their stock need to be performed at how other software companies perform, the multiples that they want is how other software companies are valued at, then they have to increase their commercial revenue that is coming from commercial segment, and which is what they are doing. So I'm happy to see that their commercial count has increased 124%. Other thing is adjusted free cash flow, right? Many of these high growth companies are known to burn cash like it's anybody's business. But now they are in positive adjusted free cash flow. I'm not going to put much credence to this because I don't know what this adjusted is yet. I have not gone into the detail of what adjustments have they made, but the fact at least they've come back and talk about, as they say, free cash flow. Other thing which many of these software companies are infamous for, okay, I think that will come a little later. So I'll talk about that. Yeah, so looking at the commercial segment is good growth overall on a commercial side. Yes, this is the one. A lot of companies are notorious, many of these high-tech startup companies. Palantir is one of them. Snap is another one of them, is high stock-based compensation. Okay. They'll basically, they'll give a lot of stocks to employees, right? Which, if I'm an investor, it dilutes my holdings, or the percentage of my holdings for that company. So over, I would say, last 2 years, not last year, ever since the Palantir came to public market, the stock got hammered because of stock-based compensation, huge concerns. But now it's good to see that they are actually quarter over quarter, they are focused on reducing the stock-based compensation. Right? So if you look at start from 14 million now to 10, so which is good here, right? And now decreasing the stock-based compensation, you're able to increase your cash flow, free cash flow. That's even better. I think I had one picture here in terms of how some of the companies, because nowadays, as you know, markets, investors, they're all demanding for free cash flow. So we would see a lot more companies coming and talking about how they are doing better in free cash flow. But one of the way to do better in free cash flow is to not pay your employees in cash. I had one picture. Yeah, this. And this is what management tries to do with investors, saying, see, I got a free cash flow. But the way they generate that free cash flow is by not paying employees. They pay employees through stocks. So in fact, that's a dilution that they do. But for the investors, so it is good to see that at least Palantir has increased or moved to adjusted free cash flow, but that cash flow is not coming from stock-based compensation. So anytime if you're looking at the companies and looking at a free cash flow, always go and check their stock-based compensation and see, how much of that free cash flow is coming from stock-based compensation. Because it could be a sign of a future trouble. Right? What if employees, if they have to retain employees, they have to continue to give more and more stocks, or if they don't give those stocks, the employees will leave, then how is company gonna innovate? So that's on Palantir. Like I said, they were notorious for their stock-based compensation, but getting some handle on that. The other thing I wanted to focus was on commercial count. On both aspects, I think company has done better. They are reaffirming their guidance. Despite all the headwinds, anything that's happening, they're still saying we'll still meet our guidance. So I'll continue to hold this in my portfolio. Palantir didn't do that great, or like all the other stock growth stock companies. It has fallen, lost almost 60% of its value. Let's find out exactly how much did it lose. YTD 63% this year. Same is the case with Meta. So the same is the story with a lot of these high-tech growth companies. But I think so far, based on the earnings side, I am still okay to hold my stock, my position in Palantir. And if it stays range bound like this, what else we need as a option seller? We love these range bound movements. So I'll continue to hold Palantir. All right. Next one. If you have any questions, yeah, please do ask in the chat. Otherwise, let's move on to the next one, which is Doximity. Any holders of Doximity? Nope. So Doximity is another company we had reviewed. I like this company when they went IPO because it was actually making profits, whereas most of the companies, especially the social media companies, don't make any money. So those who don't know Doximity is a social media company focused on medical professionals. It's a very niche, but it's a creating a hub for all the medical professionals. They have almost 80% of the US physicians on their platform. And they basically provide tools for all the medical professionals. Of course, you have your social media, you have a connectivity with the other doctors on other hospitals. You can search, you can do a LinkedIn for that. They also integrate some news feed about what's the latest advances, medical articles, some sponsored content from medical pharma companies, clinical discussions. Hey, I have this patient with this very unique issue, very unique problem. You can actually chat with other doctors, and then helping doctors to do their job faster and better, digital e-signature, digital fax, and all that stuff. So this is the company which was actually net profit when they went IPO. So I've been tracking this company, and I think so far so good. So I do see hand raise. Yes. Yes, go ahead. You can unmute yourself. S, did you want to ask something? I see you raised a hand. Okay, might have been mistake. Okay, so I will continue. Okay, so looking at the results, revenue is up 29% year over year. As a social media company, which is dependent on advertising revenue, this is still okay. Net income came a little down for them. Operating cash flow is so there are free cash flow of 37.7 million, which is higher than what they had last year, which is a positive sign. So overall, I'm looking at number of customers increasing, these are the big paying customers. So their customers would be healthcare companies. It could be, anyone who wants to advertise their services to medical professionals, right? So customers that pay more than 100K, that's been showing us some decent growth of 37%. Net revenue retention, even though it has fallen down from second quarter, it's still up. It is still up, almost 35% from previous one. And 128% is not that bad. 173% is like snowflake kind of net revenue retention. So I thought only snowflake is at 170%, but looks like I didn't know. I don't think I reviewed it in quarter two. So I didn't realize that in quarter two, they had a net revenue retention of 173%, which is almost unheard of. Very few companies, you can count it on your fingers, the companies that actually have such a high NRR. Most of the software companies will have NRR between, let's say, 110. Anything between 110 to 130 is good. Okay, so they are on 128. It's still very good. Okay. High growth revenue and attractive margin profile. If you look from revenue perspective, it's been growing 49% compounded annual, and the margins, adjusted EBITDA margins, are growing at a much higher pace. Right? So this is what gives us what I like is operating leverage. At some point of a time, we do want to see company becoming more profitable. I mean, they don't have to the profile changes in wherein they can become more and more profitable with the same amount of revenue. It means they are managing their cost. They are now coming to a space or a place in their journey where they're getting the economies of scale in their operations, right? So if your operating margin is growing at a higher rate than your CAGR, that's a good place to be in, right? So also now it is decided, they announced 70 million share buyback. Not sure if I like it. I'm in a two minds when it comes to the share buyback, because on one side I consider it as hey, you're a growth company. Why you're not investing that money? Don't you find any other ways to make use of this extra cash that you have available? Why you want to return the cash to the shareholders? Maybe go ahead and buy another business. Maybe go ahead and grow your business. Right? Are you not seeing any other growth opportunities in the market? Right? So that's one side of the house. The other side of the house, saying the fact that they are able to get this, $70 million of share buyback, it means the company has got a strong balance sheet and the P&L profile. Because this money comes from your free cash flow. When you're buying back your shares, you can't buy back shares through an accounting tricks. Right? This is how your capital allocation decisions. Either you can invest, you have a free capital available. Either you can invest, or invest in property, but you can buy or do some acquisitions to grow the company, right? Or you can give dividend, or you can buy back the shares, right? If you're not finding any other growth opportunities, you can do these things. That's what the CFO has to do as a capital allocator. Now the fact that they are buying back, it does mean, okay, they want to make use of, they're at least generating free cash flow. Ramesh, the other reason could be Congress is going to stop buybacks. I don't think Congress is going to stop buybacks, but Congress is going to levy some additional tax on buybacks. That Congress already told. I think there's an additional tax on buybacks starting 2023. That is why we do see few more companies. I mean, I agree. It is one of the reasons why some companies may be doing their buybacks this year. They might have front loaded or moved up in the calendar. If the plan was to do a buyback in 2023 Q1, let's do it on 2022 Q4. You can save some additional money on the taxes, because I think that regulation starts to kick in 2023. Yeah, but I like this. Stock has been at multiple places, being social media, being dependence on advertising revenue. Stock, if you really look at, it came IPO at what, maybe 45, 35, $40, went all the way to $100. Few days ago, it was like half of where it came IPO, and then it had almost 33% jump after inflation numbers came in. So that's Doximity. Okay, see, as for Roblox, yes, I do not have Roblox, so but let's go to Roblox. Okay, and let's pick up Roblox Investor Relations, or BLOX, and see what Roblox had reported. So if I'm coming to Roblox, the only thing two things I want to see is, number one, the growth in the players. Number two is a growth in the Robux, right? So there we go. This is what we'll do is, let's say, and this is what I was doing in the morning, is go to the company's website and see what they're doing. Number two is also, let's get a balance sheet. Let's look at their that just won't work. Okay, so we will be looking here. Okay. All right, so looking at Roblox, revenue was up only 2% year over year, which is not great, but not surprised because the kids are back in school. Free cash flow was negative, again, not that good. Bookings were up 10% year over year and 15% year over year, but the revenue was up only 2%. So this is a little concern. It means even though the players or the kids who are playing, they have bought the Robux, which increased their booking 10%, but they haven't spent it, right? They haven't spent it in the games, so they can't recognize the revenue. So other thing is, average daily active users is up 24% year over year, which is good. Hours engaged is up 20% year over year, which is also fine. But it's a surprising that if there are more number of users and they're playing more, but they're not spending. And that is why average bookings per daily active user is now down. So which is a little concerning is why those players are not spending. Is it something in their logic, or the advertising stuff, or the tools that they're providing to the developers, or the developers of the games are not able to make their skins and the weapons attractive enough for players to buy more. So I would say in this case, there is something for both, for bulls as well as bears. So someone who's a bull will look at the average daily active users is growing, hours engaged is growing. But if I'm coming from a bearish side, this would be, yeah, but why is your revenue not growing? Even though booking is growing, but that's not being converted into revenue. So I would say this is lukewarm. I don't know because I didn't look at Roblox. How did the stock behave after the earnings announcement? Not be. The concern would be, I think bookings growth is fine. The concern may be on the revenue. Okay, yeah. So stock market didn't like it as well. Probably market has the same concerns on you're not able to convert those bookings into revenue. Then that's the issue. So generally, Roblox earnings, CNBC will have some blurb around its earnings. There we go. Down after, yeah. So booking revenue, the beat analyst estimate. Average users were up, but the losses were 50 cents. Revenue. No, this is wrong. Revenue figure is what Roblox called bookings, which includes sales. No, CNBC's got it wrong. I don't think what they are saying is right, because they themselves talk about revenue is up only 2%, wherever the booking is 7.1 million. So the bookings and revenue is different. Come on, guys, CNBC, I don't expect these things from you. No, oh, sorry. So sometimes you have to be careful what you read, because this is factually wrong. The revenue figure is different. Revenue figure, I think maybe the definition is right. The company generates revenue by the sale of Robux, which is right. Bookings is the deferred. Bookings basically get deferred and get converted to revenue as and when the Robux are spent. Okay, so it's not really clear. It's confusing on the CNBC side. But I think, yeah, this is the same concern is your losses were higher and you were not able to convert those bookings into revenue at the same percent. So market punished the stock. Cool. Any specific questions on Roblox? All right, let's continue to move on to our earnings. Next one is NIO. NIO is an EV company based out of China and now expanding to different parts of the market. So last week I mentioned if I'm looking at NIO, I do want to look at how they are doing in Europe side and what their vehicle sales overall are. Right. So it's one of a high-end company. So this is the company that competes with Tesla model in China. And of course, they also have some exclusive stuff for NIO buyers. They got exclusive clubs, then some merchandise that NIO owners can buy. So let's look at what I want to look at is vehicle sales and the revenue. So overall vehicle sales increased 38.2%, which is fine. Margins look to be much better than what GM's and the Chevys put together, but I think this is on the same lines as what Tesla does. So overall revenue, so car revenue increased 38.2%, overall revenue increased 32.6%, which is decent. I want to look at the number of cars sold. Okay, operating results, deliveries in Q2 2023 is 31,607 cars, so that's been increasing from 24.5 to almost 31.5 is what, almost 30% increase in vehicle deliveries. Oh, its number is over there. Okay. Yeah, almost 30% increase in vehicle deliveries. So 30% increase in deliveries, almost 32% increase in revenue. No surprises over there, plain simple math in this. What I didn't like is stock-based compensation, right? I think feeling the pressure that you need to show some cash. Maybe this quarter they gave a lot more stock to their employees, that the stock-based compensation actually increased to 130%. Right? So when you see figure like this, then anything around their cash flow, you need to discount and see how much of this cash flow is actually sponsored by stock-based compensation. Right? So don't look at the cash flows, etc., in isolation. But what I liked here is October delivery is up 174% year over year, which is good. What I got disappointed was on the Europe side, they just started. They unveiled it in Germany, Netherlands in October. So I guess there is nothing to report on any numbers in the European segment. So yeah, I mean, I hold NEO. You guys know I've been holding it for quite some time, and we'll continue to hold it. This is my EV play. But the biggest risk in this is a China-based company. So anything which is related to China has a big geopolitical risk, could get shut down anytime. We may be asked, could get delisted anytime. We don't know what CCP government would want to do, and, could put whatever conditions they need to. So that's the biggest risk of investing in China. Some says China has become uninvestable. I won't blame them. For some, it could be. It's a risky proposition. But for me, I think I'll continue to stay. It costs me nothing to stay in NEO. So yeah, we'll see. If it works out, it's a lottery ticket for me. But from a business perspective, I think not too great, not too bad either. Concern is on SBC, increase in SBC. So we'll have to dig deeper on what happened. Other thing I wanted to see was battery as a service. And I didn't see if they have broken down their revenue. Overall revenue is 1.8 billion. Vehicle sales is around 1.67 billion. So I guess maybe this half, 150 million, or yeah, should be from maybe battery as a service. But they haven't broken this down, which is surprising. Maybe that business is not growing at that place, which would be a little concern. But overall, I think it's still okay. Any questions on NEO? But if I have to talk to someone around, why do you do options? This is the most shining example I have in my portfolio about why I like option selling. It's on NEO that my average buy price of NEO stocks have been around $10, and my current cost basis is negative $13. So it means almost $23 of option premium extracted on NEO stock, I would say over 3 years. So yeah, I don't have to rush out from my stocks. If you can, take some time and, chip in and nibble in getting option premium slowly and steadily. But I think this is the best example that I have in my portfolio of reducing the cost basis through options. All right, let's move on to the next one, which is Affirm. Affirm, I want to look at Affirm to see how the health of the BNPL, when it's not the market, but the BNPL consumers is. I don't own any shares in Affirm. but I do own shares in Square, which paid up $20 billion, $22 billion for Afterpay, which is in BNPL segment. So I wanted to know what's happening on the firm. Situation wasn't good, right? Overall, they do talk about how BNPL is growing, but if you have seen me, I'm not a big fan of this whole BNPL stuff. I don't know. I think it's just another way to basically get more people into more debt, and continue to extract money from them. I'm not a big fan of this whole BNPL stuff. Maybe I'm of a different generation. I don't know. Today's generation, they like BNPL stuff because they don't want credit cards, but it's not all rosy in BNPL. We have seen what happened to the countries, where this stuff has been around for a few years. So anyway, looking at Affirm, they did talk about their active consumers are growing, merchandise volume is growing, active merchants have grown by a lot in this year, 2022. So they've been very aggressive in working with merchants to adopt to BNPL. Right? What we didn't like was larger than expected loss, right? Because of the lowering of a fiscal 2023 outlook. That's one which markets didn't like. If you look at their loss perspective, operating margin was like negative 80%. I mean, they're losing money like hand over fist. So it can't sustain this business for long if the business profile is like that. So I'm not a big fan of this single business model, and I think it does show up in numbers. And they also reported a key customer slowdown. Right? So that reminded me, we also had analyzed this when it came IPO. So I thought it would be good to go back and see. Yeah, we did a review of their S1 on what? Yeah, it's almost 2 years ago, right? We did an initial review of their S1 document when they came IPO. If you go back and look at the major risk, so I said the customer concentration is a big risk because Palantir at that point of a time was 30% of their revenue. So I said it's a huge risk if you have such a big revenue coming from one customer. And now we know what had happened to Palantir. Right, 2020, it was a great for Palantir. So Affirm also rode that same wave, but now the key customer slowdown that they mentioned is Palantir. So it has come back to bite them in terms of the customer concentration. So that's on Affirm. So I mean, I'm okay. Square has bought Afterpay. I couldn't do much about it. I can't go and tell Jack Dorsey, but at least Square has got other businesses. But that's one thing which I don't like in Square is their acquisition of Afterpay. But I think what they can do, because they have both the merchants as well as the customer side, they control. They have a systems for both. Probably they can derive a lot more synergies through this BNPL offering for merchants which are on the Square platform, and then for the consumers which are on the Cash App platform. I think that's the reason why Square had bought and acquired Afterpay. Otherwise, standalone, this as a standalone business, not good. Right? And you'll need one recession to really know, how your consumers behave. How your consumers whom you have given those loans, how many of them actually come back and pay. Okay. So things are not looking good. So there are other companies in BNPL segment, Klarna is another company. I think they also slashed their valuation by like 40% or 60%. So yeah, I've been pessimistic about this business. I still continue to hold the same views. All right, next one, Coupang. All right, what is Coupang? Coupang is Amazon plus Instacart plus DoorDash that operates in South Korea. So it is South Korean based e-commerce company, and they are very, they're doing some good things to set up the e-commerce infrastructure, right? At least they are known to be I don't know if any of the Indian e-commerce companies can compete with it, but from a delivery perspective, Amazon cannot. They have an overnight delivery promise. Like if you order it before midnight, it will be there at 7 a.m. on your doorstep. If you don't like the stuff, just leave the stuff outside your door and they'll come and pick it up. So pretty convenient. And right now they've been in investment mode to build the infrastructure of delivery infrastructure in South Korea, right? Here we got a USPS, we got a FedEx who have already built it. So Amazon could ride on USPS and FedEx for many years before Amazon started to build its own infrastructure for delivery. But same thing doesn't exist in South Korea. So they've been focused for many years just to build the infrastructure. So yeah, I like this company. I hold it in my portfolio. Overall, I think net revenue grew $5.1 billion, 10% year over year. We can say, not that impressive. But Amazon grew 7%. So when you consider Amazon grew only 7%, whereas they have AWS, which is a huge growth engine, right? And still Amazon could only get 5%. So from that perspective, 10% is great. But if I want to score the management on their operations, it's a 27% year on Forex neutral basis, right? That's what management controls. When you're looking at an operation side, then the whole Forex or dollar strength, we'll have to discount any changes because of the change in the dollar strength, right? Because that doesn't contribute to the operations. So from an operationally perspective, I think management has done fantastic to grow their revenue by 27% year over year, right? Gross profit is up 64%. They have not given a Forex neutral basis, but of course it looks like the Korean won has devalued way more than some of the other foreign currencies have devalued against dollar. On an average, I've seen US companies reporting 7%, between 5% to 8% impact of Forex. Non-US companies, I think we looked only at Mercado Libre, that they are reported around 10 to 15%. But Coupang has 27% headwind, 17% headwinds, because that's a difference due to Forex. But that's not in management control. So from operations perspective, they're still done better. The gross profit has increased 64%. And now they have a net income of $91 million. Not a huge, but at least they have a net income. They are net GAAP net income, not adjusted, but the net income. Charlie Munger says, what adjusted EBITDA or adjusted income is BS, right? Because you can put those adjustments and come to whatever numbers. But good to see that they are now have a net profitability. What I wanted to see also, last week I mentioned I want to see the revenue growth and the customer number growth. So they didn't actually list on the customer number growth in their press release. So I had to dig deeper into the document to see customer growth is only 7%. So I want to see this continuously grow and this continuously grow. So customer growth has been only 7%, but despite that, they have been able to grow their revenue 27% on constant currency. It means they are able to extract more from existing customers. So we need to look at, I don't think they do at a quarterly level, do they do have a cohort analysis to see how customers spend has been increasing the longer that they stay with the company. So I need to just check it out and see if they have a cohort analysis. Just hold on. Let's see. Coupang. Investor relations. Let's see if they have a presentation. Nope. They only have earnings release, which is what we are going through. It doesn't have cohorts. No. Okay, but I think that's a good part that they are able to extract more. So total net revenue per customer has increased 19%. And the gross profit has increased by 64%. So I think it's still fine. Two numbers are still in positive direction, even given the headwinds that we are seeing in the market on a lot of the e-commerce side. This company growing 27%, constant currency is still better. Let's see any other management commentary. Our continuous progress, a reflection of billions of dollars invested over past 7 years to build unrivaled network. Yeah, that's what we were talking about. So by the way, their CEO is a dropout of from Harvard, and their focus has been to build network. And I think once they have a network, then they can monetize it, because there is no other company who has got such a deep penetration in South Korea. We achieved another milestone, delivering a record net income of 91 million across the entire business. I'm not surprised because they're focused on net income. The the situation in the market is like that. Net income, free cash flow is the mantra. Much of the recent improvement has been a result of investing in technology, infrastructure, supply chain, process innovation, blah blah blah. That's fine. So yeah, so I don't have I don't have any concerns on this one. I think the company has done good by increasing revenue as well as increasing the ARPU. All right, any questions on Coupang? Oh, disclaimer, I do hold this stock in my portfolio. So I think apart from Affirm, I think all other stocks that we discussed, I hold in my portfolio. Next is Unity. So Unity is a company that creates a platform which allow other companies to build interactive real-time 3D content. So this company became famous in 2022 because of everyone was stuck at home. A lot of people started playing online games. A lot of new gamers came in. So both Roblox, Unity, Epic Games, their shares were like through the roof. Now, if you're allowing other people to build games, so Unity doesn't have any games of its own. But Epic Games have Fortnite. It's from Epic Games, very famous. A lot of people love Fortnite. And Epic Games also have a game creating engine, which is called Unreal. Okay? But Unity also has an engine which others can use to create games. So there are a lot of game publisher companies which uses Unity platform to create 3D games. So that was their biggest, I would say, tailwind in 2020, maybe till half of 2021, until when the COVID restrictions started to loosen up, kids going back to school, people going back to jobs, and then they started focusing more on other use cases, which is working with manufacturing industries, automobile industries, to create, let's say, a virtual factory. They are tying up with the cities to create virtual cities, so that you understand if someone has to lay a pipeline, etc., how the changes will look like. You're doing any development in your city, making changes in the city, it's much easier to observe in a 3D model, right? Before you actually go and start digging the stuff. So they are focused on both, trying to increase your non-gaming revenue. And of course, on gaming, they are one of big players. There are two big engines, Unreal and the Unities. Okay. A little history. The stock had been punished over past few quarters because of some issue in their, this one. So somewhere in after Q1, the stock was down almost 40% because of some issue in their in their data model, or let's say AI model, in which it learned from some of the bad data and misplaced a lot of advertising. So basically, the operators that use their platform couldn't put the the ads at the right places and couldn't make revenue. So at that time, CEO had mentioned it will take them a few quarters to basically get the right data and make their AI model to relearn it from the correct data. Right. So let's look at from their revenue their earnings. So they have two solutions. I don't think I mentioned it here, but they have two separate businesses. One is called Create Solutions, which allows gamers, or for that matter any company, to create either games or 3D any type of 3D content. It could be even a training program, right, for let's say Boeing maintenance team. And then they have another solution which they call as an operate solution. So generally when they report a result, they will talk about their create solutions and then their operate solutions. So operate solutions is the one which is, hey, if I'm a game developer, I use your create solutions to create the game. But then I use operate solutions to monetize the game, to track, to see how many users are actually clicking where, to host my games. So that's the whole peripheral side of running and managing my business as a game developer, is what the operate solution is. So overall revenue is increased 13%. Create solution was increase of 54%, which is fine, but operate solution revenue actually decreased at 7%. Okay. Now, operate solution revenue is what is based on the usage of the platform. And we do want to see this increasing. The create solution is more of a licensing stuff, right? You bought the license, and I think they have a different tiers of license. You bought a license, that's fine. You paid it money one time, and now you're building your games. Where the revenue should, which is your recurring revenue, which is a SaaS revenue, which is what Wall Street wants to see, is a recurring subscription revenue, is coming from operate solutions. That now you're using Unity system to run your businesses. And then, of course, there's some strategic partnerships, etc. But that's the revenue is small. So decrease in operate solutions, from my perspective, is not a good thing. It means they haven't yet figured out, or they haven't yet fixed their AI models to basically help their customers to generate more money. Because if customers don't make money or don't generate revenue, then Unity can't make revenue. So I'm a little concerned, even though overall revenue has increased, I'm a little concerned I have a concern on their operating revenue going down, right? Loss from operations was 74% of the revenue, which is huge. And I'm okay with it for now. because they have to spend money to fix the problems that they had. So this could be, may not be, a long-term problem. Dollar-based net expansion rate also went down, but I would say it was on the higher side anyway to begin with. So 111% still okay, right? But I am concerned around on operate solutions. But management had asked for a few quarters, so that time when we looked at it, this falling down, like as if the bottom has been taken out under its feet. It fell on 40%. So I told, we do want to look at for at least 4 quarters to see how management comes back on it. Right? Surprisingly, I think after the results, stock was up like 30%. I don't know why. Maybe street expectations were even worse, and they did a little better than what the market was expecting. Right, so that may be the only reason. They completed the merger with Iron Source. So Iron Source also operate in the operate solution, where they help them to get more positive free cash flow side. So they had acquired this company, and now I think they finished their integration. They also launched a self-service feature for game server hosting and matchmaking. What I found interesting was this is where I want to see them, is to move away, diversify outside of the gaming sector. And news like this, wherein Tilbury Douglas, they launched a Connect configurator, so which will drive, basically focusing on construction industry. Second thing is Orlando Economic Partnership unveils the first digital twin of an entire region with Unity. So they'll have a basically virtual 800 square miles of Orange, Seminole, and Osceola counties instead of Florida. So this gives the diversification outside of the gaming sector, which is what I want to look at from a long-term perspective on Unity, right? How are you growing your industrial business? How are you growing your this business of a digital twin business? So that's it. I think I'll still hold it. I hold it in my portfolio. Stock has been down a lot, but 1 or 2 year doesn't matter. So I'll continue to hold it in my portfolio. So that's Unity. I think that's was the last one on the earnings side. Oh, did I have more? No. So next week, still a lot of companies still do report earnings. We do see Target, Lowe's, TJX. So these are the retailers. We see NVIDIA. I do want to look at NVIDIA next week. JD.com, not much. Yeah, Macy's. So next week is a retailer. So we'll get to know what the consumer health is, how much consumers are actually spending. That will give us some insight into where are we in terms of recession. Is consumer pulling back on spending? If that's the case, then it won't be good for, near term won't be good for the market, because ours is a consumer dependent economy. Right. Let's say C hasn't reported. C will report on Tuesday. They haven't reported the results yet. Okay. Oh, Ramesh says time to buy ENPH and Phase Energy for options. Stock will be added to NASDAQ 100 index on November 21st. Yeah, then it might get a little bounce from that itself. And Phase Energy. Alrighty, so now let's get back to the other side. We looked at the the title for today's session was Tale of Two Markets. Where did it go? The title. Yeah. So we looked at the stock market. Now let's talk about the meltdown that's happening on the crypto side and the lessons that we can learn from that as an investor. Okay. All right, getting back to where is that? There we go. I had another heading around how to lose $32 billion in 8 hours. Right? So this story has consumed a lot of airtime, even on traditional media. Forget about the crypto media. I think right now the whole crypto media, crypto enthusiasts, crypto journalists, only thing that they are focused, and crypto Twitter, only thing that it's been happening is the whole drama, which is around FTX. Right? FTX is an exchange. I think is the third biggest exchange, crypto exchange in the world. And that's it's got two flavors. One is the offshore, and another one is FTX.US, which is US based exchange, founded by Sam Bankman-Fried. Now today I saw a tweet saying it's a Sam Bankrupt-Fried, which is in a way it's right now that is the fact. It is founded by Sam Bankman-Fried, who also founded a company called Alameda Research in 2017. And Alameda Research is a trading firm. It's a market maker. And they are a big market maker player in the FTX itself. So that should have been a first red flag of kind of a self-dealing, even though Sam and have been have been always talking about that Sam has always been talking about so the story is building like every hour, right? So it's so amazing. So Sam Bankman-Fried have always been saying that Alameda Research is a separate company, FTX is a separate company, have nothing to do with each other, but he is a CEO of kind of a owner of both the companies, right? He did bring in a new CEO, and today I was seeing some videos of a CEO of Alameda Research circulating. I'm like, gosh, with that and what she has to say in some of the videos, I'm like, how could anyone not think rationally about FTX and Alameda? And that's the worst part. So we as an individual investors, we can blame saying we are not savvy enough, we don't know, and we basically believe in the big VCs or believe in the more savvy investors, the big Wall Street firms who would have done their due diligence, right? Because this company has gone through multiple rounds of VC investment fund, right? July 2021 raised $1 billion. I forgot the valuation. October, their valuation was raised money at $25 billion. Jan this year, it raised another $500 million at $32 billion valuation. Right? And now in 48 hours, that valuation became to zero. And later on, I do have a list of, you look at the list of the investors that have been in this, with a list of investors. You will see who's and who's of the world. You see Tamesk, you'll see Tiger Global, right? You'll see IVPs, Sequoia. Something that you don't want to see is Ontario Pension Fund. Where did it go? You got a Paul Tudor Jones, Multicon Capital, right? Altimeter. And these are all seasoned investors, right? Insight Venture, Lightspeed. There is Ontario teachers' pension fund. And none of them caught any wind. I would say probably everyone had their greed visor on, and didn't want, or probably didn't do any due diligence on who's the board of this company, who's running, who are the the management team members, etc. I think everyone was still drinking from cryptos. PS Cheng, how did it become third largest? Heavy marketing or something innovative? So so here's the deal. If you have to trade in coin XYZ, which is not listed on Coinbase or regulated US exchange, where do you go? You go outside, you go to Binance. And then, or, other one, which FTX came in because they started charging zero, that they reduced the trading fee. If I recall, they were saying you don't have to pay anything for trading on FTX. And so they saw a lot of volume, lot of users moving toward FTX. And then even if we look in the media, there was always the shady characters around Binance, because no one knew where Binance is based out of. Binance had so much of a regulatory concerns across the world. They kept moving from one country to another, trying to sign the deals and, working with the regulators of each country. So a lot of people had a concern on Binance. And then another option was, okay, there's an FTX. Now, whether it was all, smoke and mirrors, whether it was a criminally, at some point of a time, looks like it may be a criminal move, saying that he didn't disclose all the self-dealings. But net, even if you go back and look into the media, FTX was considered by many of these big VCs as a much better regulated or safer exchange than Binance. So anyway, so that's how it became the third largest from a crypto exchange. And of course, there was a huge marketing spend. So FTX also own, now I don't think they own anything because they don't have any money, but they bought the rights for FTX Arena. I don't know which city is it. If you go back and look at the Super Bowl ads, they spent heavily on Super Bowl ads as well. Right? And earlier this year, Sam Bankman-Fried came as a messiah for the rest of the crypto industry, right? We saw, so let me list down some, not the hacks, but some of the meltdowns that we have seen in crypto, right? One was the Mt. Gox, way back. OGs will know it. Then we saw DAO hack, and that's when the Ethereum got split and the MakerDAO hack happened. Ethereum got split into Ethereum and Ethereum Classic. Then which ones? I mean, we have seen smart contract hacks, but these are not. Recently, we saw Terra Luna blow up. Then we saw 3 Arrow Capital blow up as a collateral damage for Terra Luna blow up, and then Celsius, right? And then BlockFi was on the block for blowing up before FTX came and say, hey, you know what? We could spend money on you and we can save you. And as of yesterday, BlockFi issued a statement saying they are also pausing everything because they don't know if they can be saved as well. Voyager Digital. And then we saw Sam Bankman-Fried going and trying to save, Voyager Digital, BlockFi, and everyone. And in fact, a few weeks ago, Sam was in Congress talking and lobbying about the regulators or regulations, why these DeFis should be regulated. Right? So remember, FTX is not DeFi. FTX is a centralized exchange. Right? Just like any other company. It's got a CEO, it's got a management team, it's a centralized exchange. It's like you're trusting one particular company. But then he was lobbying hard to put some more regulations around DeFi, which is the decentralized. No one owns. So there are protocols, there are exchanges like Uniswap is a decentralized exchange, right? And that time, I think Mike, he's talking his books because he's running a centralized exchange. And if the DeFis are to be regulated, more and more business will move towards centralized exchange. Also, to his credit, he is the second largest donor, largest political donor after George Soros. So quite cozying up with the Congress and politicians, right? And now, as things are unveiling, now we know why it could be. Now we know that when he was trying to save Voyager, Digital, BlockFi, etc., why it was. Because if those things are gone down, a lot of scrutiny would have come in, and they probably would have exploded, would have gone to the shady stuff that's happening between Alameda and the FTX. Okay. So let's jump into the sea, and this got all the makings of a movie or a good book, right? Is what the heck has happened, and such an interesting stuff. It's not even done yet. I don't think we have seen the bottom yet. There are many more skeletons that might come out of it. A few more companies probably will also become victim of this, and will come out and say they are also bankrupt. There has to be a lot more collateral damage than what we have seen in last, let's say, 72 hours so far. Okay. So this is how the current structure is. So you got a trading firm called Alameda Research, AR, and then you got an exchange called FTX. Both are owned by Sam Bankman-Fried, even though he tried to distance himself, but having the same exchange and the biggest market maker is owned by the same owner is a shady. I don't know how everyone overlooked it, especially the savvy investors. The largest exchange in the world is Binance, right? So when Sam started FTX in 2009, CZ, who is the CEO of Binance, he understood that, he needs to get his skin, get some ownership on it in, if it becomes really big. And so he did invest in FTX, but then it became very big to start challenging Binance, right? So then it became a too big a competitive situation. So he divested in 2021 from Binance, and he got $2 billion in the FTT tokens, right? So now let's bring in FTT. FTT is a exchange token. It's like you can call as a discount coupon, etc. If you hold these tokens and in your profile and you're now trading on FTX, you get some discounts. So when Binance divested, they got $2 billion worth of FTT tokens as a part of the divestment. So what happened is earlier, I think 2 weeks ago, and this is what yeah.
Can you explain that? So what they haven't cashed in Binance, they lost, right?
No. So yeah. So yeah, I'll come to that. So Binance had been holding FTT tokens since 2021. Okay. Last, I think, coin, what was it, last week? But this is, this is, such a, they didn't get the credit that they deserved, because everyone talking about a lot of other stuff. No one is paying a lot more attention on this stuff. But CoinDesk came up with a report on November 2nd, where they looked at the Alameda Research, which is a trading firm, market maker, and looked at its balance sheet and said that much of this balance sheet is held in FTT token, which is issued by FTX, which is another Bankman-Fried company. Right. So here's, now you got your Alameda Research, which is a company which is holding lot tokens of FTT, and more than half of their balance sheet is considered FTT tokens, right? So huge portion, and what they do is both the Alameda Research, because it's a trading firm, they collateralize these FTT tokens to raise, money and buy and trade, right? Because FTT is a token and you can collateralize it, give it to some other Wall Street firms, give it to, let's say, 3 Arrow Capital, give it to Multicon Capital, or give it to anyone else, and then raise money to use for your trading purposes, right? So that was the situation. And now a new situation came in, which was like after this collapse, was how some of the customer funds that were in FTX were also given out to Alameda Research. But that story was later. Right. Now, like I said, recently, Sam Bankman-Fried got very cozy with the regulators, trying to bring, do the right thing in front of regulators. And this got a lot of crypto people upset because he was talking BS about the decentralized finance and saying how decentralized finance should be brought under regulations, which the crypto people didn't like it. And so Binance also didn't like it. CZ didn't like it. CZ also put up a Twitter post. I don't have the tweet yet, but he put up a Twitter post saying that you're kind of a backstabbing the crypto ecosystem, and it threatened that he will sell his FTT. I don't want to hold FTT because as Sam Bankman-Fried is playing nasty as for the overall ecosystem. And he says, we have a no love after divorce. We already divorced in 2021. I divested. I don't have any love. So I'm going to sell all the FTTs that I had. So that $2 billion FTT had now become, I think, $500 million or whatever the number is. Now, this tweet itself, and I don't think that CZ, who is the CEO of Binance, was doing this to favor the crypto stuff. I think he's turned out a very shrewd businessman. The fact that half of the Alameda Research balance sheet was in FTT, those FTT has been collateralized. FTT is little illiquid. And if he could dump the FTT, which will bring down the price of FTT, it could bankrupt Alameda Research. And then if it could bankrupt Alameda Research, the cozy relationship between Alameda Research and FTX would have an impact on FTX as well. So he did his master stroke of announcing, saying, you know what, I'm going to dump all my stuff because you are now going to regulators and bitching about decentralized finance, even though Binance is a centralized exchange. Alameda Research announced saying, hey, if you want to dump, we'll happily buy all your FTT at $22. And I think this happened what, November 5 or 6. Let's look at where the such an I couldn't spend too much time on it. I only spent it yesterday night, but I do want to go back and look at it. It's like it has got all the ingredients of making a movie or a Michael Lewis book. Let's look at, let's go back to 14 days. We go to, so FTX has been trading around, let's say around $25. So in 90 days. $30, $25. CZ threatens saying he's gonna sell his FTT token. Alameda Research saying you will buy it at 22, happily buy it, because if it gets below 21, they're gonna get a margin call. It gets below 14, the liquidations will start to happen. Liquidation start to happen means the Alameda Research. So the lenders who are given loan to Alameda Research and hold the FTT token will just start selling FTTs in the market, because that's what, if you don't meet your margin call, your collateral will be liquidated. That will put down a lot more pressure on FTT token, right? And that will basically have a direct impact on FTX. So that's what happened. Binance sold their FTT. Even though they lost on the FTT token, but they just wiped off their biggest competitor from the face of the earth. Everything happened in 48 hours.
How does this relate to the U.S. Treasuries? If something like this happens to the U.S. Treasuries?
Nothing happened to U.S. Treasuries.
No. What would happen if something like this happened to the U.S. Treasuries? Would it go down like this? This is very interesting.
Yeah. So if let's say China threatens to dump U.S. Treasury to bring down the rate of U.S. Treasuries, China holds less than $1 trillion. Now Japan holds more than $1 trillion. But if China threatens to dump U.S. Treasuries, it will have impact. But I don't think China is going to do that. But because U.S. Treasury is a very liquid market as well. If China dumps it, maybe some other countries may be willing to pick it up. Japan is on the US side, which is right now the biggest holder of US Treasuries. If China dumps it, Fed will come and buy it up. Right? So who has been buying US Treasuries so far? It's a Fed. And Fed can buy it like ad infinitum because, they can just produce the money out of thin air anyway. So there's a little bit of backstop which Fed is giving. I mean, there was a Bank of England had the problem. Oh, sorry, not Bank of England. Whatever is the US Treasury equivalent of in England, right? When the bonds were getting killed, Bank of England stepped in and gave a backstop. So here the federal banks will come and give a backstop. The problem is if the world loses faith on the US and the Fed, that's like Armageddon, right? In that case, what we are seeing in FTX, that's sort of a meltdown we'll see. But that's, I would say, a doomsday scenario for now for world economy in short term. But that's essentially what happened on this. They sold, the floor fell out, massive outflows started coming from FTX because then every other user or user of FTX became concerned saying, guys, if this firm is going to become insolvent. So here's the funny part. So far, Sam has been maintaining Alameda Research and FTX is different. But when Alameda Research got pummeled because of the margin calls, Sam went on a tour to Wall Street to raise money. Why? Right? That was a flag number, number 2, number 3 that went into the mind of people, that all the story that we have seen so far or heard from Sam so far has been wrong. There's an intimate relationship between Alameda Research and FTX. And then there was a concerns around, okay, guys, I want to take my coins out from FTX. Right? Users started withdrawing their funds from FTX. FTX went to Wall Street to raise money, couldn't raise much money. Right? The company that was being valued at $32 billion in January, he couldn't even raise $1 billion. Right? But anyway, so the whole idea was to raise money, buy FTT so that we can bring up the price of FTT, which is the token. But FTT collapsed to $5. Right? And then FTX, the exchange, stopped users from withdrawing their tokens. So that's what we call it. What as a rug pull is not your keys, not your coins. Same thing happened with Celsius. Is they stopped people from withdrawing their whatever they deposited, not their keys, not their coins. FTX did the same thing. Now this is the 3rd largest exchange in the world. It basically shocked everyone in the crypto industry. No one had any wind of how this exchange was operating. And this is FTX. When I'm talking about FTX, it is FTX, which is an offshore. And as of 2 days ago, Sam was saying FTX US is a regulated exchange, has no impact. You can continue to, withdraw your tokens. Nothing has changed. But who would believe what he would say anymore? Right? So we saw a lot of outflows from FTX US also. So the story continues. Robinhood also suffered because FTX, they actually wanted to, if I recall correctly, they wanted to buy Robinhood. No, I think they wanted to have a relationship with the Coinbase, but Coinbase didn't agree to it. But when FTX owned, I think 6% of Robinhood. So when this whole issues with FTX started, Robinhood also fell down. Coinbase CEO came on CNBC to talk about, hey, it's a bad player in an industry, so don't paint the whole industry with the same picture. Coinbase, we are regulated, we operate out of US, we have one-to-one reserves available for customer funds. Right? So the biggest problem that we are seeing why this is happening is when a customer deposits, right? What these exchanges do is they will loan those out, right? And those will be leveraged, positions. Let me explain. Means if I deposited or I hold one Bitcoin on FTX or pick any coin, right? FTX could loan this out to, let's say, 5 other five other players. Right? So many of these, they would loan out the Bitcoin, but then get a leverage of 5x. Means, so let's say if that coin is valued at $10, they'll basically get a leverage and loan of $50. Right? It is nothing different. We see a similar kind of a stuff in the banking side also, right? Through the fractional banking. So in a banking, if I deposit $100, bank actually create a loan through fractional banking as of, generally around 10 times. In 2020, the regulations allow bank to create an infinite number of loans on $100 deposit or whatever the deposits there. So this practice is pretty common in terms of leveraging up. So today, if all of us want to go to bank and then say, I want to withdraw my CDs, banks they won't be able to. And that is why FDIC comes in picture saying, hey, we will protect you till 250K. Well, let's say every one of us who hold a deposit in bank goes and want to deposit it, even FDIC doesn't have the reserves to make everyone whole. And last year, we looked at the FDIC's numbers. FDIC hold only 2%. So if more than 2% of the depositors go and want to withdraw it, 98% of people won't get their money from FDIC. But, FDIC is a government agency. Fed will basically print up more money. That eventually means your dollar value has gone down. So you'll get your 250K or whatever the money is in your CD, but that will be worth 1/10, right? But the guarantee is not to protect your purchasing power. The guarantee is to protect the dollar amount. So Fed can print that and still give it to you. So that system is still working in banking sector. That system stuff work in banking sector. But in the crypto sector, because there is no backstopping, there is no Fed. If you have a leverage position, everyone calls to, you get a margin calls and you can't cover it. This whole liquidation starts. And that's what we saw on FTX. And as of, let's say, November 7th, he was saying that FTX doesn't invest client assets anywhere. Whereas we saw that now, I think it was of yesterday night, another finding was that in one of our interviews, I think Wall Street Journal posted maybe early today morning, saying some of the internal document shows that some of the management team was aware that the customer deposits, crypto assets were actually loaned out and given to Alameda Research. And then another drama. So he reached out to Sam. Sam reached out to CZ because he has to save FTX, saying, can you buy us? He desperately needs money. And Binance went into non-binding agreement to buy FTX exchange, providing, after looking at the books. And this happened on, I think, November 8th. And then on November 9th, Binance came back and told, we looked at the books, we don't want to touch it. Or 9th or 10th, maybe missing a date or here or there. In a day, they came back and said, no, we don't want to buy it. So, so then on 10th, Sam Bankman-Fried had issued a letter saying, okay, so this was on 10th. Yeah, so I think he issued a letter saying on 10th, we entered into a non-binding agreement. So my date was a little off. And then on 11th or maybe 10th evening, Binance said, we're not going to buy it. On 11th, FTX files for bankruptcy. And the drama just didn't stop at, in the morning. The drama continued. Yesterday evening, there were photos and videos circulated over Twitter. SBF he's in Bahama because this offshore exchange is registered in Bahamas. And then there were rumors that he's trying to escape in his private plane. Today morning, I think he sent a note to Reuters saying that, I'm still in Bahamas, I'm not going anywhere. Okay. But this story has been unfolding of every, hour basis on what's happening here. But again, the whole deal is, and then yesterday night, and this is while I was, like I said, I was doing dishes and I was jumped into a Twitter space where these discussions were happening. And while we were there, the breaking news started coming is there was some attack happened like yesterday night. Someone said hacker moved some $300 million away from FTX. And everyone's like, we don't believe it. It's some insider job. And then the general counsel comes back and tweets saying, hey, it was from our white hat. We want to safeguard the rest of the funds. Today morning, there was a news that Sam Bankman-Fried has built a backdoor entry into FTX so that he could do some shenanigans without raising auditor alarms. So a lot of stuff is happening on this. Guys, I'm sorry if you have any, I think, and in the Twitter space, there are people who came out and basically talked about how they had everything invested in FTX. And now they can't withdraw anything. They lost all of their savings. So bad situation. Sorry, you had a question?
No comment. The Sam Bankman, whatever, he has a low profile. So I don't think people are as pissed off as at what's his name? At Musk.
Now people are. I mean, he is like a boyish look. He's an MIT grad, and everyone was, his
but
rose
what
to
I'm saying
prominence.
is, like 30 years ago, everybody was pissed off at Bill Gates. But what did Bill Gates do to us? He didn't do anything. He actually did nothing.
Oh, but he didn't do. I mean, he may not have benefited you, but he didn't have you, lose all your savings, or he wasn't a this is a criminal operations, right? And okay, yeah, I was talking about it yesterday. There was some photos that he's fleeing to South America and all that stuff. But yeah, all this, it's like a thriller movie, happening. And my main question was, what were the investors doing? None of them figured out. None of them tried to look into the books. So that's why I get more and more concerned about, companies coming on, or anyone coming onto the financial media and talking about why the other company is so great. I think as an investor, we have to do our due diligence. There is no two ways about it. Sequoia Capital had invested $200 million. Sequoia actually sent out a note to their LPs on, I think, the moment when this was discovered I think November 9th or 10th. They send a letter note to their limited partner LPs saying, we are marking down this position to $0, as if lost everything. We asked about the TMS. This is Singapore-based sovereign fund. They invested $205 million. Paradigm, $215 million. Ontario Pensions, $80 million. Paul Tudor Jones, Daniel Loeb is from Third Point, Tiger Global Management, SoftBank, and finally Tom Brady and his ex-wife now. They invested, what I heard is that they invested almost $600 million. So looks like Tom is not going to retire anytime soon now. So basically, I mean, so Tom, he had a partnership with FTX. They have a partnership with FTX, and he decided to get paid in FTT tokens, which has now become worthless. Right. So anyway, but the most one which are impacted are the FTX employees. Because it looks like a lot of, if you look at the, and now we don't even know how much to believe their books, but their stock-based compensation, which is in their FTX token, is around 950 million worth.
Excuse me.
Now gone to zero.
Didn't Larry David warn us to not do this stuff, even though it was mocking? He said, "I don't think so." Remember?
Who?
Larry David. His Super Bowl commercial.
Oh yeah, yeah. So that was I don't think so was yeah. I mean, that's why it was I don't know what's the real word to it, which is trying. That was a little more on the hilarious side, but the whole idea was there was a tons of commercials on during the Super Bowl. Right? Now that commercial could come back to bite. It means whatever Larry was saying, he was right. Right? And in the movie, they were in the commercial they tried to portray is Larry saying no, but that was the right way to use FTX. But anyway, even Mr. Wonderful, who has been talking over the last 2 years on the regulations and why the regulations and due diligence is so important. He also invested in FTX and lost money in FTX. So I think everyone makes a mistake. Everyone can make a mistake. The biggest lesson that I learned from this is, guys, position size. That's it. If you had invested 5% of your net worth, 10% of your net worth, you're still alive. You're still kicking. Right? These lottery tickets don't deserve anything more than less than 1%, right? So you're still kicking. The problem is when we become too sure of ourselves and think, yes, I found the next Eldorado. This is where I'm going to hit gold, and go too big on a position size. Okay. Time and again, that I think that's a lesson which ask me during in the stock market. One lesson that I learned in my years of investing is the position size. You can go right on everything in your due diligence. I see a comment from Jay saying due diligence could be worthless here. Sometimes gut feel is better to stay away. Remember, the VCs did plenty of due diligence. I don't think in this case VC actually would have done. They should have and would have questioned the relationship between, let's say, the Alameda Research and FTX. They should have seen who are the CEOs of these. Sam was the CEO of both Alameda Research and FTX. He only resigned from FTX legally, I think, in 2021. So what the heck? You are the CEO of your biggest your market maker firm, which is the biggest market making firm on your own exchange. That's a red flag. So I don't think these VCs, I guess the VCs were all in FOMO. Right? They're trying to hit and get the next I don't know which one. Let's next trying to get into the Bitcoin when it was $100 kind of a stuff. So that's a problem. If you look at Alameda not Alameda County Research CEO Allison, right? She's so Sam moved out. She's a CEO of Alameda Research, and now things are showing up saying they probably were also in a romantic relationship. I don't know. There's a lot of stuff going around here.
Vivek, about 25 years ago, Nick Leeson, he sacked the UK bank because he was regulating. He was checking over his own trades in the Singapore stock exchange. He was bidding against the yen to be stable. So this has happened before.
Oh yeah. So Nick Leeson brought down Barings Bank, right? One of the oldest banks in UK, if I recall that correctly.
Correct.
Yeah. So and now I'm looking at so Sam Bankman-Fried, he graduated from MIT. He was a trader on Jana or Jane Street, or maybe they both met at Jane Street. Oh, I don't know. But now I'm looking here. She spent 19 months as a junior trader at Jane Street, and that was her first job out of college. And she was persuaded to join Alameda by SBF. Oh, he also worked at Jane Street, not Jana. There's some other hedge fund as Jana, or yeah, I think that's a different one. So both worked at Jane Street, and then she joined Alameda Research as a CEO. Now people are trying to get into these things, because if everything, as long as the crypto keep going up, as long as the stock keep going up, no one wants to break that, do their real due diligence. Now people are looking at some of her interviews and saying, how come this wasn't a signal that she is the CEO of Alameda Research, when her basic understanding of economics and the capital market is so shallow as what she was talking in her interviews. Right? So I guess this story will, it's such a, I would say I'm sure there'll be a movie on this sometime. Where's our document go? So there will be definitely some movie will come out on this whole saga of how everyone in their greed did no due diligence and nothing else, right? I mean, don't get me wrong, I've lost money in BlockFi, not BlockFi, which is one, Celsius. Right? I've talked about it earlier, saying I'm moving some of my money in Celsius while I wait for investing, but that is a small portion of my net worth, right? Position size is important. And yeah, I have a scar. Yeah, I have a scar to show, but I don't have a big wound, big festering wound, right? So you have to take risks, of course, but make sure position size is right. Whether it is stock, whether it is crypto, doesn't matter. If you're becoming too big a position, that shows the greed, and we can't always be certain of how the companies will behave. That is why I love diversify and keep your position size small. I think that's a lesson. Now we can blame Sam Bankman-Fried and Ellison. I think they should be put in jail or whatever. But I guess, hey, if you have a fiduciary responsibility to your own account, to your family. You need to think through it. Do you want to put your life savings into it? Into any one stock? Do you want to put your life savings into any one crypto? Do you want to put your life savings into any one exchange, which is unregulated? I think investors also are to be blamed for themselves. Right? I am sympathetic to those who have lost money, but guys, what do you guys were thinking about it? It's not a lottery tickets. So yeah, I mean, I'll end today's session on this one. There's a lot of drama happening here. The thing that we need to look at is, will this spill over onto the capital market? So far, may not be. Haven't seen it, but like I said, the story is unfolding every hour. So we'll know which other companies come out and say, okay, we are also impacted because it was collateralized, or they had a lot of FTX, or maybe they deposited their FTX, or they deposit their other tokens on FTX exchange and were earning yield, which now they can't withdraw it. Right? So we'll see. Ramesh, Tiger Investment was involved a couple of years in bankruptcy. Tiger Global. So Tiger have, I think there is, I don't know, are you talking about Archegos Capital? That was, and again, like I said, this is not specific to crypto. Archegos Capital was run by Bill Wong, who came from a Tiger Cub, right? So this old Tiger Global Management, a lot of hedge fund managers that came out of that group used to call themselves Tiger Cubs. So Bill Wong was one of them. I think it was 2021 is when they took a lot of leverage position. And what was a $60 billion worth of leverage position? And when the leverage unwound it got bankrupt. Now Bill Wong is facing criminal. I think he was charged also. He basically SEC and Justice Department for manipulating the market. So it happens everywhere. It's not just specific to crypto. It happens in our traditional finance also. So some of the stocks like Chinese education company TechEdu, some of the stocks like we saw this one CBS, this Viacom CBS, stocks that Bill Wong was pumping. Viacom CBS, come on. Oh, not this one. Oh, it got delisted or something. I don't know which one was that. Maybe the ticker changed. But one bad earning result from that company brought down the whole Archegos Capital. This is what happened. And I mean, we had reviewed this into one of our sessions, right? What exactly happened and how these Nova News, he basically, collateralized the shares that he held to Credit Suisse, to Goldman Sachs, to Citigroup, and no one knew that this has been collateralized multiple times. And when the share crashed, Citibank, I think Credit Suisse took a charge of $5 billion on it. And eventually, yeah, it happens. It happens in everywhere there is a money to be made, there will always be frauds. So as an investor, we need to protect ourselves. One silver lining that I can take from this crypto fiasco that's happening right now is decentralized stuff is still working, right? While FTX is down, you can still go, FTX exchange is down, you can still go to Uniswap, and that's still working. It has never stopped any withdrawals. While you can't earn your yield on FTX, you can still go to Aave, and that is still working. All the issues that we have seen this year, or even which were listed, BlockFi, now the BlockFi, Celsius, Voyager, is all related to the centralized parties, and none of them are related. None of them are decentralized. Everything is still working fine. All these are centralized parties.
Hey, Vivek.
Decentralized still okay. That still continues to work.
Vivek,
so yeah,
you got to start selling audio podcast. I mean, that was how you dictated. It sounded like a great story, very dramatic.
Oh, I don't know. I mean, I got my job to do. I've got this Saturday. I don't think I have any time beyond the Saturday session to do any other things. Yeah, but yeah. So it means probably, hopefully, the regulators will figure out not to BS about the DeFi, because the problem is not in DeFi. The problem is in where we put too much faith on a companies that are owned by a single individual, and those need to be regulated. Fire. Don't try to regulate the DeFi stuff. Don't try to regulate the decentralized exchanges. Those are still working fine. All the problems in the last 2 years have been with it's like a Lehman Brothers, right? Yeah, it was a regulated company. What happened? It's a financial company, heavily regulated, still lost billions of dollars. A lot of investors lost their money. AIG International, it's an insurance business, even highly regulated business. Regulations, I don't think they had saved us. 2008 happened in the regulated industries. All the companies that went bankrupt were highly regulated, but those were all centralized, faith on a single person, and greed. So yeah, hopefully, I think the messaging becomes correct. Today, the message is anything to do with the crypto is bad. I still see that the decentralized platforms and the decentralized applications, they continue to run. They are not stopped, any withdrawals, nothing else. It's the centralized companies are having tons of problems, and which is not applicable only to crypto. We have seen this time and again, even in the traditional finance also. All right, with this, let's end today's session. It's an interesting one, so I think I thought I'll definitely cover it. I know not all of you are in crypto, but this is a lesson that we can learn from what's happened in crypto and use the same lessons in our regular stock investing. And position size, greed, and yeah, don't put your faith in any centralized entity or even on regulators. Cool. All right, let me stop sharing. Now I'm hungry. I'm gonna eat something. I hope all of you are still okay. If you're hurt by FTX, there's nothing much we can do right now. Right now, they are stopped all the withdrawals. I don't have any hope that now it will go through the bankruptcy proceedings, etc. Maybe might get 5 cents on a dollar. If you get 5 cents on a dollar, probably will be lucky. But this was the most shocking one in the crypto history, because the most smartest people got hoodwinked in this on the self-dealings and the relationship between Alameda Research, FTT, and then the CZs. There's a famous book on war strategies, right? It's from a Chinese. What's the art of war? I mean, it's the smartest move CZ did by dumping tokens, taking a loss, and killing the competitor. Yeah, Sun Tzu. Yeah. So I think that was the smartest move. And all it took was like 48 hours and it's gone. All right. If you want, we can talk. In fact, the podcast that I referred to, I was listening to it doing dishes yesterday night. I was there from, let's say, 10:30 p.m. till midnight, and I went to bed. In the morning, it was still going on. So it was like they're running like 24-hour, and Elon Musk jumped onto it. Yeah, that's a funny part I forgot to tell. Elon Musk jumped onto this FTX fiasco podcast.
Who was hosting that space?
It's from an incubator, IBC. Hold on, let me get to that. Mario. It is the first time I actually joined that podcast, because when I looked at any spaces, I wanted, while I'm doing dishes, I generally listen to something, and then I started following that person, Mario. Hold on, let me bring this person. Yeah. So he is hosting that podcast. He's a founder CEO of an incubator, And this podcast were, yeah, oh, now it is finished. Yeah, it ran for almost 10 hours.
Oh, you can play the recording. And
Yeah, you can play the recording. It's 10
a
hours long.
transcript. You can have a transcript to
yeah.
see.
So in this one is where I saw, real time, like citizen journalism. Someone, they'll stop in between saying, oh, we got a breaking news. And then they talk about breaking news. Okay. Now, 50 minutes ago, it was seen with authorities in Bahamas. We're like, we're going to look at the transcript to get the full details of how things were moving, in yesterday night. So funny thing is Elon jumped into this podcast and he said Doge to the moon. And then someone told that after he uttered Doge to the moon, Doge jumped 10%, which was, let's say, 24 hours. It was right here. Here. And then there were questions on asking Elon in terms of, are you going to use Doge for your payment services and all that? He was non-committal. He says that's not our first priority, but he was there on this podcast for 15, 20 minutes. And the moment he said Doge to the moon, and Doge token went up. That was a fun part yesterday. All right, guys, won't hold you for longer. Thank you, everyone. Sorry, we went way over. At least we covered the stock part, but I did want to talk about this whole stuff. That's been going around on the crypto side of the house. So appreciate your patience. Thank you for lending your ear for almost 3 hours, but I think that's better than 10 hours. All right, goodbye. Have a wonderful, wonderful weekend.